Hi, my name is Darius Muika, a senior investment advisor with Noor Private Wealth. If you are new to my channel, I focus on helping clients build wealth in the most tax-efficient way possible. In today's video, I will talk about the two main reasons that are causing the recent market volatility and our future outlook. As always, if you like this video and find it helpful, make sure to hit the like button. It really helps with the YouTube algorithm. So let's jump right in. The prospect of a resurgence in COVID-19 and new lockdowns made it a really rocky week for the stock markets. On Wall Street, the S&P 500 and Dow Jones Industrial Average each fell by 3.5% and the Nasdaq fell by 3.7%, all in one day. The European markets dropped by 2.6% and the sell-off was even sharper in French and in the German markets. Oil prices also plunged and the Brent crude price fell to $39 a barrel. There are two main factors driving the volatility in the markets: the rising number of cases of coronavirus and the election uncertainty. At the global level, it seems like the COVID-19 situation is slowly getting worse. There are now roughly 450,000 new infections per day. Fatalities remain shy of the numbers we have seen in the first wave, but they seem to be rising slightly and are at nearly 6,000 per day. In Europe, the virus numbers continue to go up and France is now about 35,000 new infections per day and climbing. The country's daily fatalities have now increased roughly tenfold from the summer, although these remain around 5 times lower than in the first wave. Germany and Italy are at 10,000 and 16,000 per day, while the UK is seeing over 20,000 cases per day. Canada is now around 2,500 new infections per day, slightly higher than the levels recorded in the first wave. It makes sense that the virus is spreading more freely this fall, with the colder weather, schools reopening, social distancing fatigue, and an upcoming holiday season that encourages socializing. This should be offset, however, by new tighter social distancing rules, a rise in the immune population share, and people and businesses getting better at protecting themselves. Of course, the approval of a vaccine by the FDA would spur optimism in the markets. There are currently 11 vaccines in phase 3 of testing. One of the most notable would be Moderna, who is currently undergoing a study with 30,000 participants, out of which 7,000 are over age 65, and if their results meet the FDA's benchmarks, they could potentially apply for an emergency use authorization by the end of 2020. Pfizer, Johnson & Johnson, AstraZeneca, and Novavax are not too far either. While the manufacturing and distribution of all these vaccines will be a challenge on a global scale, contracts to finance large-scale manufacturing of hundreds of millions of vials are already in place. Canada, for example, has a deal for 56 million vials with Moderna to be delivered at the beginning of 2021 if the vaccine is approved. Now, turning our focus to the election, we already made the point that in the short term, this will not have an impact on the economy. What we are experiencing now is just volatility in the face of the uncertainty of the outcome. The end is in sight, and whatever the outcome of the election will be, the real boost to the economy will be the $1.5 to $2 trillion in fiscal stimulus package. With a vaccine and fiscal stimulus in place, we could see a global economic recovery by the end of 2021, and with it, opportunities in the market for the long-term investors. The best advice I can give you is to avoid selling investments when markets are volatile in hopes of buying them back at a lower price. It sounds good in theory, but very hard to put in practice. While you might get it right once, you will not be able to do so consistently, and you will miss out on returns in the long run. Instead of timing the market, which is a losing game in the long term, focus on the quality of the investments you are buying. A good company will go down with market volatility, but will also recover and thrive in the future. We are seeing an improving outlook in the economy, and while the road is bumpy, try to remove emotions from decision making and focus on your long-term goals. That's it for today's video. I hope you found it valuable, and if you haven't done that already, make sure to hit the like button, and if you want to see more, don't forget to subscribe. If you have any questions or comments, please let me know below. I read and answer every single one of them. Thank you very much for watching, and I will see you next time.